Good morning, fellow option traders. This is Jeff, and welcome to the Daily Scan for Monday, July 22nd, 2013. All right, we have a lot to cover today, and I'm dying for my second cup of coffee, which I don't allow myself until after I've made the video, which is my motivation for making the video. So let's get moving. In the news, scheduled news events for today, just existing home sales is the only thing that's going to be happening. I would suspect, and the market is expecting that to show a rather significant increase for this reporting period. I don't know how often they do this. Let's take a look. Looks like probably every month or so, I would say. So this is a monthly report, existing home sales. And I just expect the market to just kind of drift higher for the week based on what's coming up for this week for announcements. Uncle Ben's not going to be on the stage at all, so probably not much to worry about there. Let's take a look at Asia, which is almost closed, and we see fairly good, positive, bullish numbers out of Asia right now for today. And Europe, same thing. It's kind of significant here with for above 50 or a 0.5% increase. That's sort of significant. All right. Now let's jump over to anticipated opening in the U.S. is slightly up. So like I said, I think drifting is a good word for the market. Although you might say it's like parabolic right now. Gold is above 1,300. Da-da-da-da. Big announcement. Okay, oil is approaching $110 a barrel. That's kind of scary. I bought some gas this weekend. Happened to get a good price. But you know what? I will not be making a video Thursday or Friday because I'm going to pick up my granddaughter up in Wisconsin. And you know that gas prices are going to jump this coming weekend. Just because they're watching me, they know I'm going to hit the road, so they're going to pump up the gas prices. Pump up the gases. That's a whole other subject. But am I a little paranoid? Schizophrenic? Who knows? Who knows? Okay. Also, I wanted to let you know that I am switching over to a new notebook. My current notebook is full, and it's time to start a new one. I'm on my very last page, and I'm trying to squeeze things in for this date and get the most out of my investment in my $2 notebook. So bear with me as I take a look at what's going on here. The end of last week, very busy. Closed the Rut and SPY calendars. Closed the Goldman Sachs calendar. We still have a vertical on that, a bear call. Closed CF. Made a little bit on that. I let Chipotle expire, so let's clean this list up here a little bit. I'm going to take Apple off of here. I kept Apple in there because I just was kind of always watching them, but I'm taking them off. So I'm taking CF off. Chipotle, I'm taking that off. You don't see much. LinkedIn, we're still in. Netflix, the Qs, we're out of that at expiration this Friday. Russell, we got out of that. And the spiders were out of that. So what we have left here is Goldman, LinkedIn, and our friend Netflix. So Friday, I closed my long call on Netflix. Didn't seem to be going anywhere. I looked at the risk that I would have if Netflix should pull back at their earnings tonight, and I freaked out because I could lose a ton of money, especially when the implied volatility leaves it. So that was even the bigger risk than the price movement is the drop in IV, which would drop the value of the call to practically zero. So I got out of it. I took a hit. Very well. I made a little money on that particular strike with the long call. So if you remember, let's take a look. If you remember, let's see, bring up Netflix and we'll go out 7 days. And we'll wait for, okay, here we go. I sold it for $21.80, and if you remember, when I opened the calendar, I bought it for $20.90. So I made 90 cents on that, excluding transaction costs, which wasn't too bad. However, I did lose $20 on the short side of this calendar. So overall, it was a $19 loss, a huge loss for my piddly little account. I'm going to be very, very careful with calendars from now on. But I wanted to show you anyway. You know, I was just like poking around here and thinking, you know, what if I bought another calendar today on earnings? So I'm not going to actually do it. But if we're looking at, you know, a 40-point move here, and that's what we're looking at here is $36 move between now and Friday, this coming Friday. So if it was to move that, it is currently at 264, so I picked this at $10 out, and we'll take a look at the risk profile. Let me reset these parameters. So if I was to buy this calendar, this is what my profitability tent here at expiration would look like. Almost, if we hit the strike 275 on expiration day, we could have a $2,000 gain here. But you know, that stupid old IV comes into play and really messes you up. And we're going to delve in a little bit deeper on the theta side of this thing in coming videos when we start talking about calendars, because I have not given up on calendars. I've been watching everything I can from Thinkorswim, from Donnie, what's his name? Anyway, the guy's a genius, but he makes a lot of assumptions when he does his videos, and when he talks about calendars, he likes to talk about things like roll value, and he only talks about roll value at the money. So if you're taking a guess on a calendar and expiration is coming up on your short, on your near month, and you're right at the strike price of that short, yeah, you got a really sweet looking roll value there. But in reality, it's not going to end up there anyway. So anyway, we're looking at 148 for the IV on this. Remember, we started out as around $96 when we got into this, which is a big reason why right now there's like not any money in it. Let's uncheck this. So right now there's not any money in it because the short strikes premium is being pumped up by this incredible amount of implied volatility here. So if we think that it's going to drop down to something, say, like around this 62 value, we're talking about a drop of 80 in IV. So if I was to sell something with an implied volatility of 146, and that IV dropped down 70 or 80 percentage points, I would be happy. I'd be like, you know, walking to the bank and being thrilled to death. So what if we spent $6.80 or $680 to buy this, and it did move up to 35. So 35, 264 plus 35 is about 300, right? We could make this a 300 call too, and I'm not afraid to do that. And we'll see what that looks like. We'll unlock that, relock it. Still pretty much the same price, $623 it would cost for this. But what happens, this one's only at 138, and this is at 56. So these would probably be pumped up. This one would probably go up. Well, I'm assuming that the September is going to come down 5 points. So let's make that assumption here on both sides of this trade. This one is going to come down to 50. This one is probably going to come down to 52 or 50 also. So we're talking about 80. So we would want to take 80 out of this. Come on. 1, 2, 3. So we're going to take 5 out of this one and 80 out of this one. And this is where we would end up with if that were to happen. So I'm just going to watch this. I'm going to do this simulated trade here, and we'll see how it actually comes out in the end. So, all right, now finish looking at our current positions. Let's look at all of them here. Get out of here. Activity. Okay, Goldman, we have a bear call on that. Let's take a look at what they did. Oh, a little shaky, a little scary right there. They already had their earnings. We're just going to keep an eye on this. I'm going to throw an alert on here at this 260 or 165. At or above, that's good. So we got an alert on that one. Okay, LinkedIn. Let's take a peek at that. We have an Iron Condor on that one, and we're going to just wait to see if we can pull some more money out of that. The increase in IV is killing our theta. You know, you can take a look at the Analyze tab on this, and you see that the theta is only $15. And like I said, whenever IV increases, and you have and you're short, and your shorts are closer to the current price than your longs are, you're going to actually lose money as IV goes up. So we're looking at a difference here of about 2% points in IV between the long and the shorts, and we're way out here. So we're just waiting for that one. I'm not going to take a loss on that one right now. I'm not too concerned about it. We're just going to wait. We have earnings coming up next week, so we will not worry about that one for right now. And we already covered Netflix. Okay. I wrote a post yesterday about what I'm calling a daily credit spread. And I'll probably do one today live. I mean, do an actual real live one with real money this afternoon. And we'll cover it tomorrow morning. I don't want anybody like jumping the gun right now. I'm working on a matrix based on these two indicators, the 9 moving average and the MACD moving average. And I want to, make sure that I test out the matrix, back test it, and live test it, just to make sure that it works. And there's not a lot of risk in these for right now, especially if I just do one on IWM. So just hang in there. I'm I'm pretty excited about it. I've actually been working on this particular strategy between the 9MA and the MACD for about 6 months off and on. And just have not been able to focus in on it, but I've been inspired because of the really bad July expiration that I experienced. So I'm looking for something a little bit more consistent, maybe start to move away from these higher IV and just go with the flow. Maybe stick with what I have here, which is the high volume ETFs, which is what we are going to run our scan on today. Okay, so let's start with that. We're 15 minutes into this approximately right now, so we will start with our scan and we'll just go alphabetically. Oops. And we'll start out with, this is an ETF. I lost my train of thought here, sorry. ETF on foreign emerging markets, I believe this one is. So we're looking at this to see if there's anything happening here right now, any entries for us. Again, you know, that strategy with the daily credit spreads could be applied to practically anything, I do believe, although I would tend to want to stick to indexes, whether they're cash indexes or ETFs. So right now in this one, we are currently in a downtrend, but the price just moved above the 50, and the 9 is pretty powerful right here. So is the MACD. Everything's looking really good, like we're going to get a trend reversal here. Things are looking good on the weekly. If we would have started looking at this a little bit sooner, this is a place that we probably would have jumped in based on the weekly with a 20 delta on that. But nothing right now on the daily chart. Gold is, like I mentioned down here, looking pretty good. We'll probably get a nice pop on that this morning. Still, though, this downtrend, you know, we're still looking a little shaky there, and I would not do the daily credit spread on this because of it's so gappy. Very gappy. Okay, this is a ETF on, what is this one? I'm not familiar with this one. Core S&P 500. So this is a subset of the S&P 500. I did look this one up. I do remember reading about it last week. So it doesn't really track the S&P 500. Actually, it's a little bit more powerful because it's the, you know, it's not 500. It's like, I don't know, 150 of them that are probably based on market cap or something. Is the reason why they picked out the ones that they did, like Apple and IBM and stuff like that. You could take a look at it, just punch it up and then look at the current holdings. I'm not sure if they change at all, but this is a pretty good one to take a look at. So we're in an uptrend here. Nice pullback here recently, actually. Well, I don't know, that's not all that recent because we did have a pullback in June. So, looking good here in a nice, very nice uptrend, but no entries. This may have been an entry here, but it looks a little bit extended right now, new high. We're just going to wait to see if we can get a pullback on the stochastic and get a more of an attractive entry on this particular one. This one might be a good one for the daily credit spread. But nothing happening there. IWM, which is the one that I've been working on. We may have had, I mean, you could really exaggerate and say we had an entry here, and we did have an entry here on the weekly, but nothing right now. with everything moving up so smartly, I guess you might say, we're not going to really find any entries, which is fine with me because I'm going to be on the road Thursday and probably goofing off on Friday and Saturday and then back on the road again Sunday. So IYR, which is, let me go back here. Sorry, I hope I'm not making you dizzy. Which is real estate, creeping up after kind of an extended downtrend, kind of following the S&P. A lot of these do. A lot of them are just looking the same. Same. So not able really to diversify a whole heck of a lot if we're only trading the indexes. Qs, well, that's very interesting. Why is that? Why is that? I don't know. I'll have to check that out. Anybody knows, send me an email. We're going to throw a target in here because this is looking pretty good. So this is the only one that we have a target on. Let me make a note. All right, I'm done with my note. That's interesting. Spiders. What do we have here? We have another one that looks pretty much the same. Stochastic dip down back in June, and then no entries since then. It's just been running parabolic. It's really amazing, all things considered. All right, and then TLT, which is bonds. And again, I know next to zero about bonds. I think that was something my grandfather used to buy. I'm just kidding, because the bond market, I guess, is bigger than, it's the biggest market there is right now, bigger than any other market. But we are currently in a downtrend, so we don't have any entries here. We did have one back here. And just for fun, let's take a look at what we have here as far as options are concerned for this. Alright, we have just regular weeklies, not multiple weeklies, looks like. And the next one is for July 4, or we would have to go out to August, and August isn't all that far out anymore. So if we were looking around a 20 delta, we would be up at 112, and that looks to be a pretty safe area to be in right now for the next, till the next expiration, which is out here. So we would be up at 112, probably a pretty safe trade, not bad at all. Do we want to put an alert on this? We could. Let's do that. Alright, so we had a dip down. We might get another bump up today, but we're going to put an alert on this anyway. We're looking for, come on, something around here. Let me do this. We're looking for something here in this area. And then I'm going to throw an alert on here also. We may not get up here into our target area, but if this thing makes a move down this morning, and do we have any indication of what might be going on here? I don't know if this is valid or not to look at this. Looks like it's already trading up. So it's going to gap up this morning. So we may get this move up here. So either our alert triggers or we get the move up into the target area, and then we'll decide what we're going to do. Alright, so, that's it. That's it for today. That's it for right now. Happy Monday. Thanks for watching. Have a great day, and happy trading.